Hey, Williamson County, Steve Schleter. Hey, it's time for market stats and MOFIRS. I'm going to use some of the data that Gary shared with us at MegaCamp to really focus on what is driving the real estate economy in Central Texas. And is it demand or is it supply? And actually, I would say it's both, but really it's been more of supply side economics. You are finding this that demands for automobiles probably hadn't been dramatically different than it had been in the past. And why did they go up so much in value? Because supply was constrained due to the microchip and supply side issues that automobile manufacturers were having. Well, the same forces are there in our real estate market. And let's look at some data that you can maybe use in conversations you have with buyers and sellers and in the MOFIRS that you create, and how do you back it up? And so I'm going to pull some slides up and let's take a look. And by the way, I did just check the A&M site to see if they had the latest data up for August. Not up yet. And yet, remember, Williamson County, we were only at 2.6 months supply end of July. So we're still in what would be defined is absolutely a seller's market. It's absolutely a seller's market. And yet, let me pull up these slides. We're going to go here. Let me pull this up. I'm going to see if I can get to the right slide set here. Here we go. And let me back this up a little bit. So let's take a look. So we said we're going to talk about supply versus demand. And let's go back to the housing bubble that we had with the subprime mortgages back through 2006. And then, of course, things started to come off. The wheels came off 07 into 08, 9, 10, 11, as then we began to climb out with recovery. And so we go back and say, okay, there were 32.2 million home sales in this 5-year period from 02 to 06. Now, the 5-year period from 18 to 22, 27.4 million. And we had 4 years of over 6 million housing units sold, total sales in this pre-bust that we had. And we had plenty of inventory. This was really a abundant inventory, a demand-driven market, and housing starts were robust. As you'll see in a few minutes. And then as we get over here, you'll see this purple line. Well, that's really the ideal. Just a good solid marketplace. The real estate economy would be 5 million transactions a year. Be 10 million sides. And when we look at this, we were only above 6 million once and just marginally above 5 in 18, 19, bigger bump in 20, projected to be right on par at 5 million, 0.1 in 2022. And so it wasn't nearly as much demand as it was and is, and will likely continue to be supply. And so let's take a look at a few things. We've already covered this before in some of our conversations, and that is that you'll see the supply was there during that robust housing market of the pre-Great Recession. And then the excess inventory, stuff that went into foreclosure, distress sales, it pretty much got absorbed in the next 3 to 4 years. It got absorbed, and then construction never caught up. The orange line is the ideal housing starts of 1 million a year, and we didn't get back there until 2021. We were just short of it in 20, and with builders pulling back, likely to constrain inventory going into the years ahead, we're projected to maybe have 1 million. There's probably enough on the books to make sure that actually happens for this year. And yet let's look ahead and how all this is going to impact us, because we need to make up still a housing deficit of 2 to 3, well, probably close to 3 million housing units that were deficit still I know in San Antonio, Business Journal reported 65,000 housing units short of a healthy housing market. Travis County, 24,000 housing markets shy of a healthy housing market. So let's take a look. Here's one of the big factors right now, builder confidence. You'll see that some of the lowest levels we've seen since April 2020, immediately post-COVID, in actually post-COVID announcing, where builder sentiment went in the tank, we're seeing pretty low levels. Now, what that means is builders are going to put the brakes on development. They may put the brakes on turning dirt that they have that hasn't been started for developments, or they go very cautious in terms of phases that they open. Excuse me. They probably not going to do as much speculative inventory right now. So they're just going to pull back a little bit, see what the economy does, see what happens with interest rates. And so all this is going to go to constrain supply. Now, when is it going to, show up as a biggest factor in our market? Maybe not for 18 or 24 months is when it really starts to hurt. And it starts to hurt from the standpoint of we're right back to 1 month of inventory. We're back to half a month of inventory. And we very likely will be back in a place like that in the next 24 months, which means what is the MOFIR? The MOFIR means the time to act is now. If you want choice, if you're looking for your forever home, the factors in our economy today say that this is probably the best opportunity you'll have right now. Will that opportunity be open for 12 months, 18, 24? That we don't know. And yet all the factors, especially the net migration to Texas, says that we're going to be back in that place again very shortly. So back to my slides. And the last thing I'll share with you here is rents. We're seeing rents on the rise due to inflation, and that's going to continue. And because they're rapidly inflating, rental property is a hot commodity. And Texas is finding that 28% of institutional, or 28% of transactions in Texas were institutional. Hedge funds, retirement funds, investment groups, Wall Street, hedge funds, buying blocks of residential real estate to turn them into rentals. And this is likely to continue as well. As soon as there's signs of more stability in the economy, look for that to really accelerate. Or if there are signs of weakness in the economy and they can support bulk purchases or large deals, that would actually accelerate this as well. So all that said, what's the MOFIR? Act now. If you're looking for choice, if you're looking for your forever home, this may be a window of opportunity. We don't know how long it's going to last. If you'd like to schedule your no obligation consultation to talk about the factors driving our real estate market, contact me today, and I'd love to set a meeting. So the MOFIR's opportunity, interest rates, while up, are still actually historically normal. It feels like the consumer is starting to accept that a little bit. So get your message out there, schedule appointments. This could be the window of opportunity not to miss right now for those people looking for the ideal home. See you guys.